Welcome to our breakdown of the latest results from the Singapore Exchange. Now, SGX just dropped some huge numbers for the first half of their fiscal year, and honestly, they're record-breaking. But as we all know, behind every big headline, there's a real story. So today, we're going to dig in and figure out not just what they earned, but how they did it, and what it all means going forward.
That's so true, Alex. I mean, you look at a chart like this, and it's easy to just go, wow, up and to the right, great, and just move on. But for any savvy investor, there's a simple framework you've got to use. First, what are the actual numbers? Second, so what do those numbers really tell us? And finally, now what should we be looking out for? And that's exactly how we're going to tackle this today.
All right, let's get right into it, starting with that first big question, the what. We're kicking things off with the big, flashy numbers, the ones that grabbed all the headlines and really show what an incredible half year this was for SGX. So, first up, the big one, revenue. We're talking $695 million. And to be crystal clear, this isn't just a good number, this is the highest half-year revenue SGX has ever posted, period, a brand new record.
And it's not like they just barely squeak past the old record either. This represents a 7.6% jump compared to this time last year. So they're not just hitting a new high, they're building some serious momentum on an already strong foundation.
Okay, revenue looks fantastic, but what about the bottom line, right? What about profit? Well, SGX reported an adjusted net profit of $357 million. Now, that word adjusted is really important, and we are definitely going to circle back to it. But for now, the main thing to know is that this number is up by almost 12%. That's really strong. And finally, here's the part that really matters to shareholders. What does all this success mean for them? Well, a bigger dividend. SGX announced an interim dividend of 11 cents per share. That's the company's strong performance translating directly into cash in investors' pockets. So, Ben, there you have it. The headlines are pretty clear. Record revenue, soaring profits, and a bigger payout for shareholders.
That's a perfect summary, Alex. So, we've got the what covered. Now for the really interesting part, the so what. I mean, a record number is great, but where did all that money actually come from? It's time to pop the hood and see which engines were really firing on all cylinders.
And this chart tells such a great story. You can really see the breakdown here. The absolute powerhouses were FICE, which stands for fixed income currencies and commodities, and your traditional cash equities, the bread and butter of buying and selling stocks. Together, those two segments brought in over $50 million in new revenue. What I find fascinating, though, is that this growth was so strong that it completely covered for a small dip they saw in equity derivatives. That right there is the sign of a really healthy, well-diversified business.
Oh, for sure. And if we zoom in just one level deeper, we can see why those areas did so well. The reports point to a couple of key things. First, just a generally positive vibe in the market. Confidence was up, which meant more people were trading stocks. But it wasn't just that. In that FICC bucket you were just talking about, they had a record-breaking half year in iron ore trading. Just incredible volume. Plus, currency derivatives were also on fire. So you've got this great combination of broad market optimism and SGX just absolutely crushing it in some of their specialty areas.
You nailed it. That mix is the magic formula investors love to see. But there's one more piece of this puzzle we really need to understand. Alex, you mentioned the term adjusted net profit earlier. Now, for everyone listening, whenever you see the word adjusted in a financial report, that should be a little signal to lean in and pay closer attention. We have to figure out what was adjusted out, and more importantly, why.
Okay, yeah, this is exactly where things can get a little jargony. The documents keep mentioning something called an impairment loss as a big reason for the adjustment. So Ben, for all of us who aren't accountants, can you translate that into plain English? What on earth is an impairment loss?
Haha, happy to. And I promise it sounds way more complicated than it actually is. Think of it like this. Let's say a company buys an asset, maybe another smaller company, for $100 million. That asset now sits on their books with a value of $100 million. But a few years go by and it's not performing well. They have to admit, you know what? This thing is really only worth $80 million today. That $20 million difference is the impairment loss. The most important thing to remember is that no actual cash leaves the bank. It's purely an accounting entry where the company officially says, whoops, this investment isn't worth what we originally thought.
And check this out. This chart shows us exactly how this played out for SGX. On the far left, you see the reported profit of $343 million.
Then, SGX adds back that $15 million impairment loss we just talked about, which, by the way, was tied to an underperforming investment called Scientific Beta. They make a couple of other small adjustments, and voila, you get to the adjusted profit of $357 million on the right. See how they walk you from one to the other?
Ah, okay. That makes so much more sense. So the real key takeaway for investors is that they'll often focus on that adjusted number because it strips out these one-off, non-cash items. It helps them answer the fundamental question, how is the core, day-to-day business of just running the exchange actually doing? It really gives you a cleaner, more honest look at the company's operational health. Precisely. It's all about cutting through the noise to find the real signal. All right, so we've covered the what, the record-breaking numbers. We've tackled the so what. We know where the growth came from and how to interpret the profits. That just leaves our final section, the now what. Let's turn our eyes to the future.
And that really is the multi-million-dollar question for anyone looking at these results, isn't it? After a performance this strong, driven by a hot commodities market and confident investors, can they keep that momentum going? Now, SGX is saying all the right things about focusing on quality and stability, but they operate in a volatile global economy they can't control. The real test, I think, will be whether that diversified business model, the one that works so beautifully this half, can continue to protect them if one of those high-flying areas starts to cool off. The question isn't just if they can beat this record, but if they've built a business that can keep thriving even when the wind isn't at their back.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events, and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.